Good afternoon. Good afternoon, everybody. I hope that you can hear me. I hope you can see the slides. Welcome to ActivTrades Monday Market Matters webinar for 7th of October 2024. It's Paul here. Thanks to all of you for joining us. Okay, I hope you've had a good weekend. I hope you're ready for an interesting week in the markets. Here we are today to talk about how to trade gold. Always a perennial interesting subject, but of course, based upon the price action we've seen this year, it just adds to the flavour, shall we say, in terms of people's interest in trading gold, an instrument that you can trade here with ActivTrades. And before we begin, as I said, we'd really appreciate just checking and confirming that the technology is working in our favour rather than against us. If you can confirm in the chat box that you can hear my voice and that you can see the slides, that would be a great start. And then we will crack on with our session today, ladies and gentlemen. Much appreciate the help. Okay, so what are we going to talk about? Well, as we're here for Monday Market Matters, we'll talk about the news that we've had at the end of last week, and also the news that we've got coming down the timeline for the week ahead. And as I said, we're going to talk about gold. Okay, we'll talk about why is gold a popular trading instrument, and what do traders who use price action, who are using charts, tech analysis, what do they need to be aware of? And I'll be sharing how can we best trade gold using simple price action setups that we see on the charts that are available to us here on the ActivTrades platform. And then, as always, we'll switch across and have a little bit of a check on the live markets to see how the US markets are opening up at the start of the week. Before we go a little bit further, it would be interesting to know, of those of you joining us here today for the live session, be interested to know how many of you actively trade gold at the moment. Be interested. Put that in the chat box. Maybe you're new to trading. Maybe gold is not something you've traded before, and that's why you want to hear and learn. And that's absolutely fine. That's absolutely fantastic. That's what these sessions are here to help give everybody just a little bit of a educated introduction to trading gold, but it'd be interesting to know those of you who already have some experience. So Abdul says yes, he trades gold. Fantastic. And as I said, I'm always happy and intrigued to find out how other traders engage with markets. So by all means, please feel free to put in the chat box what you how you look to engage with gold markets. It's everybody can always learn. It's always interesting to see people's takes on particular instruments or particular trading styles. For those of you who don't know me, my name's Paul. Traded for many years, traded for funds, traded for clients. Primarily, I trade FX indices and commodities. That's what I like to focus on. And I tend to be a trend trader for swing and position trades, and I tend to be a mean reversion and reversal trader for short-term intraday trading. And the great thing about trading gold as an instrument is that you're able to engage with it on the sort of shorter-term intraday basis, but also people will trade it on the longer term and the swing basis, and actually also people will take much longer-term positions on. So there will be an element of that conversation running throughout our session today. So I appreciate some people will be joining us for the first time. Monday Market Matters is our regular webinar series, just helping traders start the week off in the right frame as we prepare for the opening of the US markets in about 25 minutes time. So every Monday, 2 o'clock London time, we take a look at the news that's coming out for the week ahead to be aware of. The major piece will be on education. So today it's about trading gold. We always have a little look at the tools and the ActivTrades platforms and tools that you have access to as a client, and also have a little look at the live markets. Okay, look at the live markets as we go into the start of the US session. Okay, so as always, we start with having a little look at the news. And I said every week, I make no apology. If you're new to trading, I don't expect you to know, and be able to analyze the data, the economic data, but it is important that when that economic data is released, because that economic data might induce volatility into the market, and volatility is very much a double-edged sword. Okay, when you're on the right side of it, makes for a fabulous trading session. When you're on the wrong side of it, it can make for a challenging trading session. So It is in your best interest to understand when the data is being released. You can find that out on an economic calendar. There is an economic calendar on the ActivTrades website that you can access and use. And there are other ones available on the internet, so there's no excuse not to basically have an idea of when the major data is coming out for that week ahead. So when we look at the data we've got coming down this week, first we can have a little look at how the price action sort of reacted to Friday's data. On Friday, we had the non-farm payrolls data. We sort of spoke about it last week about how we could expect that number to be pumped as we run into the US elections, and certainly the number was a very clear beat on the estimate, and that was reflected in volatility in the on the markets. And that will follow through this week because we've got a little bit of data coming out, and some of it will be very interesting, very useful. Tuesday, we have a sort of a slew of data from the Antipodean countries, in particular Australia, but perhaps the major one, sort of Tuesday night going into Wednesday morning, is the Royal Bank of New Zealand monetary policy meeting, and we are expecting, the forecast estimate is that the RBNZ will cut interest rates, by 50 basis points from 5.25% to 4.75%. That is already being reflected in the price of the New Zealand dollar, which we might have a little look at later if we get the opportunity. Wednesday, we also have at 7 o'clock London time, and please just make that assess that based upon where you are in the world joining us. I appreciate we have a truly global audience. We have the minutes, of the FOMC meeting that traders will be interested in. But then on Thursday, we have the American CPI data, and that will be at 1:30 UK time. What we will be interested in, of course, is to see whether that number is lower than estimated, which would give us an indication that inflation is decelerating faster, and that starts to put traders in an interesting quandary, because last week we had big NFP jobs numbers, which would invariably mean that you're unlikely to want to start cutting interest rates much further if the economy is still overheating. But on the flip side, if the CPI numbers are way below estimates, that would mean that the inflation is decelerating faster, and you would want to lower interest rates. So the FOMC, the Federal Reserve, might find themselves in a little bit of a quandary. So people will be watching that data on Thursday keenly to see how that plays out. On Friday here in the UK, we've got GDP numbers, we've got some Canadian employment numbers, and then we've got core PPI in the US, as opposed to CPI on the Thursday. So not a huge week in terms of quantity, but certainly some of those elements in terms of like the RBNZ meeting, the FOMC minutes, American CPI, they are very important bits of data, And as I said, traders and investors will be watching them keenly to see, A, how the data comes out, and B, how does the market react to that data? So as always, make sure that you're on top of your economic calendar. Okay, so that's the news piece we always look through. Let's focus now on our education element, which is all about trading gold. And as the slide says, many new traders, they're happy to focus on trading FX markets or equity indices, all of which are fine asset classes to trade, all of which are available to you to trade at ActivTrades across their wide range of platforms. However, there are other asset classes available, one of them being commodities, and we have previously looked at commodities instruments available for ActivTrades clients to trade, and you can find those webinars on the webinar archive on the ActivTrades website. But as always, we've had feedback and requests to cover gold in particular. So here we are. And a lot of that is because, of course, this has been a rather interesting year for the price of gold. We've seen gold trading at all-time highs. So invariably, that in itself attracts interest. And that's why we'll have a little look and a chat about it today. And as it says, we'll go into further details on trading gold, primarily using price action, just using simple ideas on charts based on both a swing basis and an intraday basis, as I said a little bit earlier. People invest in gold, people swing trade gold, people intraday trade gold. It is an instrument that attracts traders and investors from across the entire spectrum of timelines, and that's what makes it, for a more of a volatile and an interesting instrument for traders to be involved in. So, as I said, I think Abdul said, joining us today, he said, trades gold. If you're trading gold yourself, or if you're fascinated, or maybe you've never had exposure to it, maybe you're new to trading, that's absolutely fine. These sessions are here to help everybody across the broad spectrum, and there's always something for everybody to take away to help them progress in their own trading endeavors. So remember, there are a huge range of commodities that are available to trade on the ActivTrades platforms for ActivTrades clients. Also, you can trade some of the companies that are directly related, but you can see there is a broad spread of commodities, both hard commodities and soft commodities, that you are available to engage with and trade here with ActivTrades. But what we're looking to do is to focus primarily on gold. And it would be interesting, before we just move to focus on gold, of those of you joining us here today, how many of you trade other commodities at the moment? Okay, maybe you trade oil, maybe you like trading silver, maybe you like trading some of the agris, some of the soft commodities. It would be interesting to know what, if any, exposure people have. Whether people just primarily just like to focus on trading gold. Some people like to just trade in one instrument. Lots of people trade lots of instruments. Okay, it's all about finding the sort of the most ideal way for yourself to engage, and we're always fascinated to hear people's experiences. If we are going to have a chat about commodities, not just gold, but commodities in general, it is always an important point to note that if you are trading commodities, it is also important to understand the US dollar. Okay, the US dollar is and remains the reserve currency of the world, based on the largest economy in the world, that of the United States. Commodities are primarily priced in US dollar, both soft and hard commodities. And I know that we've seen over the last year or two elements of some change in that, and there are some countries that are looking to sort of trade some of their commodities in their own particular currency. However, that is still it's still a very small, insignificant part of the overall commodities market. Okay, the US dollar still rules the commodities markets, and so with that, all countries need to hold or have access to US dollar in order to facilitate commodities purchases and all the global trades. And that's something you have to take into account. In the FX world, over 50% of the FX trades involve the US dollar. So it's therefore the US dollar is keenly watched to see what, if any, impact it has on the commodities markets. And so major moves in the US dollar will also have major impact on gold price moves. So if you're new to your trading journey and you're looking to focus on trading maybe gold, maybe commodities, you just also have to recognize that you also need to make sure that you're on top of your analysis of the US dollar, because there is a real, very direct link there between moves in the dollar and moves in gold. Okay, so if you're not already taking that on board, I suggest you do, and we're going to talk a little bit about that deeper into our session. It's also worth us having a little bit of a chat as, why is gold so important? Why do traders love trading gold? Why is it such a popular instrument? So, most people would be aware that, in the past, throughout history, because it was hard to mine, meant it was difficult to obtain. And because it was difficult to obtain, that was one of the main reasons that gold was valued. Gold throughout let's say, the human experience on the earth, gold has been used as a way to acquire wealth, to store wealth, to facilitate trade, and many early currencies were backed by gold, including the US dollar up until the early 70s. So For centuries, people have held gold in high regard and they will remain coveting it. And you have to just take that on board. You just have to recognize the psychological impact that has on people, that, people covet gold, and there's various reasons that gold is used. And so that plays into people's views on gold, that plays into people's analysis of the gold market. And you have to sort of just be aware of that, especially, when you look at things like geopolitical events or also major global trends. And we'll look at some charts of that in a moment. It'd be interesting for those of you who know and trade gold. What is it that drives you towards trading gold? Is it purely because of its technical ability, or is it something deeper within you that basically enjoys trading gold? There's no right or wrong answer there. It's always interesting just to reflect upon your trading decisions and what's brought you to that point, because that can help give you deeper insight into your own style as a trader. It's always worth understanding the things that sort of kind of traders and investors need to be aware of, okay, when having any engagement with gold. When you look at physical gold, when you look at physical gold, and I'm sure you will have all, if seen gold bars, maybe you've not owned them or held them, but undoubtedly you will have seen them, you'll be aware of them. What we see in terms of investors in physical gold, that includes individuals, that also includes central banks, and it also includes ETFs, exchange traded funds, who hold it on behalf of their clients who are trading gold related ETFs. You also have to remember, we talked about the psychological impact. Gold is also still seen as a safe haven investment. But on the flip side, what you also have to remember is that gold pays no dividend and it pays no interest. You have to remember that, okay, in terms of why people would hold gold over maybe holding other instruments that do pay a dividend or do pay an interest element of sorts. And also what we also find is, and what has been of interest in the last couple of years, is gold is very often used as a hedge against inflation. So Simon says, I trade gold, but I do not overly think into why I do trade it very rarely, as I do not understand fundamental drivers as well as I thought I did before many losing trades. So this session is great for improving knowledge. Well, thank you for that, Simon. Thanks for the feedback. And it is right. And it's just think of it as this is part of your deeper understanding of not only markets and trading, but also yourself, okay? And the time spent to just reflect upon why you make certain decisions, why you focus on certain instruments or certain styles of trading, it is an unbelievably useful exercise because it gives you deeper insight into understanding yourself and also into understanding the best way for you to trade, okay? Everybody has their own, everybody has their own little different views. Everybody has their own way, okay? And understanding what drives you and what brings you to certain markets or certain styles of trading is incredibly important. Now, I appreciate at the start of your career, you're just probably, you're just interested in, where is the opportunity? But actually, as you go deeper into your trading journey, you start to realize these things are all, linked. They're enormously helpful, and you're raising your self-awareness about these incidents. I assure you will help you a great deal as a trader. So Simon says, I tend to trade gold usually when there is a differential between interest rates data released by the US and US financial data such as CPI, NFP, but this is very rare. And that's absolutely true, and that's absolutely spot on. We might have a little talk a little bit about that later on as we go deeper into our session. But it's amazing how all of these things are linked. And as I said, also how because as long as humans have walked the earth, they have coveted gold, and that in itself taps into a deeper part of our psyche. So, if we're going to look at how to trade gold, one of the first things we can look at, okay, one of the first things we've talked about in the past is about understanding context. It's about understanding the overall context of the market. And one of the best ways that new traders can get a grasp of the sentiment undergoing the underlying market is to understand whether we are in a risk-off environment or whether we are in a risk-on environment. That is generally sort of, a very good starting point. And it's a relatively simple point, okay, in terms of being able to understand the underlying sentiment. As always, sometimes it's very clear, other times it may appear murky. That does not mean you're a terrible trader, okay, or that, that your analysis is poor. Markets are huge, they're fast moving, they're dynamic, they change, okay, and basically just being able to recognize when perhaps you're unable to analyze or perhaps get it clear, that is absolutely fine, that's absolutely par. But there are times when it is very clear whether the market is in a risk-off environment or whether it's in a risk-on. Invariably, when markets are in a risk-on environment, that means that traders and investors, they are searching for return, and so they are likely to embrace risk. Remember what we just talked about in terms of gold. Gold is very often seen as a safe haven instrument. So if the underlying sentiment is all about risk on, well, that is no surprise that we see such things. Just bear with me 1 second. When we're in a risk-on environment, that is very often why we'll see gold going down, okay? Gold going down, Swiss franc and Japanese yen, which are also seen as safe haven assets, going down, while we'll see oil going up because people expect there to be more demand for oil because the economy is growing. And also we see kind of beta currencies like Aussie, Kiwi and sterling, they tend to go up as well. So when we start to see these things occurring and happening, that helps us get an indication of the overall risk on or risk off sentiment. On the reverse of that, okay, when we're in a risk off environment, what we'll see is traders, investors, they are worried, they are concerned, they are fearful about the future. So things like safe havens tend to rise. So we see gold going up, Swiss franc and Japanese yen safe havens going up, oil going down because people think there'll be less demand for it if the economy is contracting, and also beta currencies like Aussie, Kiwi and sterling going down as well. So all of those things, as I said, when you see it very clearly, it helps us give us an indication of what the market is looking at. So just even in this particular example, on this daily chart, we can see here actually for the last part of that month we saw price going down. Okay, gold price going down. That was a reflection of the risk. We're in a risk on environment. But then we can see reversed, and then actually for the whole month, gold was just racing higher all the way through the month. That is giving us an idea that we were in a risk off environment. And as I said, all of these things can help us just understand context, understand the bigger picture, have that self-awareness about what's going on in the market, because that can help lead us towards making better trading decisions, which is what we're always looking to achieve. So, as I said earlier, sometimes it's not clear, other times it is very clear which environment we are in. When it is clear, and that's what I said, when it is clear, that is when we look to engage. If the markets are murky, if you're struggling to identify or understand whether we're in risk on or risk off, that is the time maybe to go and focus on other elements. But when it is very clear, well, then which environment we're in? Well, then we can switch across to our ActivTrades platform. And then I have a look at what I have is a row profile, okay? Risk on, risk off profile. That's what I have. And you can set that up on the ActivTrades MT5, MT4, okay, ActivTrader, having a profile that will just help you look for correlated trade setups. That's what we're looking for. Remember what we just looked at there in the previous slide about what we expect to see when we're in a risk-on environment and also when we're in a risk-off environment. Having that data together can just help us understand what's going on and how we want to look to position ourselves. So here is a simple, here's a simple trading plan, just the basics of a very simple plan. So, I'm going to look to trade gold in the direction of the risk environment. Remember, in the direction of the risk environment. So if we're risk off, I'd look to be a buyer of gold. If we are risk on, I'd look to be a seller of gold, okay? just a very simple filter, simple understanding of the context, allow me to position myself accordingly, allows me to just focus on what I need to see, allows me to focus on the important elements for myself that I can take on board and utilize. What I'll be interested in particular is the daily, the 4-hour, the 60-minute, and the 15-minute charts. All right, that's what I'm particularly looking for. And what we're looking for is we're looking for correlations between the US dollar and oil, Swiss franc, and Aussie. Remember what we sort of said there, okay? When we're in a risk-on environment, we're going to see gold drop, okay? We're going to see oil rise. We'll see Aussie rise. We'll see Swiss franc drop in a risk-on environment. And the flip side of that, when we're in a risk-off environment, we'll see gold rise. We'll see oil drop. We'll see Swiss franc rise. We'll see Aussie drop. So all of these elements, excuse me, can help us in terms of identifying the environment and then looking for what we are particularly aiming to achieve, okay, in terms of, you know, the overall main plan is to trade gold in the direction of the risk environment. You know, I'm not trying to be, I'm not trying to be, a rock star, okay? I'm not trying to be super smart. I'm just letting the market lead me in terms of where it wants to go. The market is always communicating to you. And, you know, when it's very clearly telling me the risk environment, well, then I'm not going to fight it. What I want to do is find a way to ride with it. So, you know, once I have my kind of context, well, then I'm just looking for very simple existing price action setups. Things like pin bars, okay? Pin bars, engulfing candles, star formations, key reversals, price action combinations, or even bounces off the 50-period moving average. These are just simple patterns that allow me to sort of trade in the direction of the risk environment. If you are, if you're new at your journey, okay, new at the start, okay, still trying to understand what those kind of price action setups are, well then, once again, go and have a look at the ActivTrades website, where you'll find in the archive section lots of videos on those that I've done previously on those particular sort of candle patterns and setups, and also on the ActivTrades YouTube channel, you'll find them there as well that you're able to sort of engage with and take on board also. So, you know, here is just an example from, the, my Roro profile here, okay? This is just a kind of a weekly setup here. So what we can see here is, you know, for the last few weeks, okay, we have seen gold rising. Gold was rising up to a big round number there, okay? And we'll have a little look at the live market in a moment. So we've seen gold rising there over the last few weeks, whereas actually we have seen oil dropping, okay? We've seen oil dropping. Immediately, what is that kind of telling us about the likelihood of the overall risk environment? If oil is dropping and gold is rising, that is giving us an indication that we are in a risk-off environment. That is particularly what we're looking for. What we're also seeing, okay, is, you know, we're seeing the dollar against the Swiss franc over the last month, okay, that has lowered as well, which means dollar's weakening, Swiss franc is strengthening. Swiss franc strengthens, gold strengthens. There's correlation in there, okay, and the sort of moves that we're looking at. We also start to see that, we start to see that basically, you know, gold's going a little bit sideways. Bitcoin is rallying there, okay, up against the gold because of the way gold is reacting. Gold is dropping. That means that invariably that you know, gold is rising when we see that dollar drop. So you can just have a profile or just a few of these particular instruments that can very quickly give you a little bit of an idea and understanding of, you know, what we are likely to be seeing in terms of giving us an idea of, you know, what is the overall risk sentiment. When it's very clear, I want to trade in that direction. I don't want to fight the market. I want to ride it. That's what I'm looking to achieve. Yeah. Then for the intraday traders, okay, I appreciate there's some intraday traders. Well, you know, then we have to look at, well, you know, what can we take on board? How can we work with the sort of the kind of the data that we have to basically help us? But once again, using the correlations can help us being able to just use the simple price action, okay, tools that we've discussed in previous sessions. They can all be taken on board as a way and a means to help you with basically trading gold. So, as I said, simple price action setups like pin bars, engulfing candles, rejection candles, star formations, key reversal formations, okay? Bounces off the 50-period moving average when we're in a trend. All of those are available to us as a way and means to effectively give us a little bit of an idea of the way to operate. And what, as I said, once again, what is actually always useful to understand is to basically to understand, how very often I kind of gold and oil can be very, very much related in terms of the way they particularly operate. And remember, both gold and oil, not only are they inversely correlated due to, when risk is on, oil is up, gold is down. When risk is off, okay, gold is up, oil is down. Those also both, those are both commodities priced in dollar, and so there's an element to be taken into account there. And so let me just clear this up here, okay? So in this particular moment here, this is like a 30-minute chart, which I find a great chart to basically just work as your filter chart for the case of for intraday trading. Some people will trade much lower, and I can do, but I find the 30-minute chart is for an intraday chart is the one to sit on to give me an idea of the way we're looking at. In this particular example here, oil, okay, for the last 3-4 hours was drifting lower. Well, oil, whereas gold for the last few hours was drifting higher. And that's, that can help me, okay, especially when I'm getting things like supporting lots of bullish pin bars, okay, lots of bearish engulfing and rejection candles. Just that kind of correlation there, as I said, helps me identify what's the risk on, or what's the risk center on an intraday basis, and can I work with that? Okay, how can I work with that to give me a help? What we can see there is, of course, is that the dollar has been dropping. Dollar dropping is good for gold rising. That's what we like to see. So all of these points sort of just come together in one particular time and place. Excuse me. And as we said, those correlations, not only can you see them on an intraday basis, but you can also see them on a wider range, on a wider timeline. In this particular case here, we can see kind of July through August through September into October, we had basically dollar strength, whereas through July, okay, through August through September into October, we had gold weakness. And as you can see, that is a very beautiful, the dollar index there it's a beautiful trend. The gold isn't as pretty a trend, but we can see that it is still continuing to make, lower highs, lower lows. It's not always a perfect correlation, but what we're looking to do, especially on the longer term as a swing trader, is, as I said, we're just trying to understand the context so that we're in a position to trade with that trend, and then basically utilize our existing knowledge of just simple price action triggers that give us an opportunity, as I said, to trade in the direction of the risk environment. So we can see that on both daily charts, but also on the 30-minute charts. You'll see those correlations. They will play out across the board, and that's always important for us to sort of take on board in terms of our own understanding. Because invariably, also when we see those correlations are either breaking down, or they're not very clear, or there's volatility, that in itself is a warning sign that perhaps maybe we just need to hang back. Maybe we just need to sit in our hands for a short while, let those correlations reassert themselves, and then look to sort of trade in that particular direction. And as I said, there is the correlation relationship between gold and the dollar, but also with oil and gold. Okay, in that particular, when we had that down, we've had effectively a move lower in gold, but actually what we've had is also a move higher in oil during that same period. Remember, if oil is rising in that could be a part of geopolitical tension, but in general kind of market cycles, when oil is rising, that's an indication that we're in a risk-on environment. Okay, people think the the global economies are growing, if that means there'll be more demand for oil. So people are confident, okay, people are positive, and so invariably when things are risk on, well then basically gold gets sold off. All right, remember gold tends to rise in risk off environments. So starting to building yourself a little row profile and having these here and being able to just look at those correlations, and when they are very clear, that can be an enormously simple way for you to understand context and make yourself a plan to trade in the direction of the risk environment. And also, once again, here is an example. We've got gold on the daily chart, and we saw that, excuse me, during that period here, gold rallied all through that particular month. Whereas what we saw was also dollar against Swiss franc dropped during that month. Now, remember, if that is dropping and the dollar Swiss franc, what's that implying is that the dollar is weakening and the Swiss franc is strengthening. Remember, Swiss franc and gold are very closely correlated. So that is giving us further confirmation that in that particular time we were in a risk off environment. But you can see for that, just that particular month there on the daily chart, there's actually, great trends in place, great trends that supported each other. And that's what we like to see. Okay, when there's correlations like that, when they are supporting each other, it just gives you more confidence, okay, not only in your analysis, but also more confidence in your overall ability to, as I say, trade in the direction of the risk environment. It'd be interesting to know, of those of you joining us here today for the session and those of you who trade gold, how closely do you look at correlations with other instruments, or do you just literally, trade gold in a silo, just look at gold itself? I'm hoping that basically just by being able to understand some of the correlations, it helps you build a picture, helps you understand the context. And from that means you can make better trading decisions in terms of understanding what patterns you're looking for and what triggers you're looking to take on board to engage with. Okay, so here's some homework for you. I always like to give you a little bit to take you away, to give you something to work upon, give you something to move yourself forward as a trader. So establish yourself a row profile, okay, on your ActivTrades platform. And we'll have a quick look at mine there when we switch across the charts. And use that. Can you analyze that to establish whether we're in a risk on or a risk off environment? As I said, sometimes it will be very, very clear. When it is, you should engage. Sometimes it will be murky, and that's okay. Okay, there is always change going on. There's always markets in a state of flux. Also, do you see any very clear correlation between those instruments and the row environment? And also understand what is the relationship between gold and the US dollar, and also I'd include, oil, West Texas oil. And if you are able to establish the environment and establish the correlations and relationship, can you also identify trade opportunities? Are they showing there up for you? So Simon says, I look at correlation with gold all the time. My best trade of the year was a silver long when gold recently broke through to the all-time highs. That's fantastic. Well done, Simon. Okay, congratulations. Well done on some great trading there. And it is, being able to understand those correlations can help give you confidence in your trade plan and how you wish to look to engage with the market. Okay, so before we switch across to the charts, just in conclusion, remember, Monday Market Matters webinar is here to support you in 2024, every Monday, 2:00 London time, all right, where we'll touch on the news, some education piece, and the ActivTrades tools and markets. I have said this from sort of day one of the year, that it's going to be an interesting year in markets, and I hope you'd agree with me that it has been an interesting year in markets, and I suspect we're going to find that continues for this final quarter of 2024. When it comes to looking at gold's been coveted for thousands of years, and that really is unlikely to change. Okay, that's unlikely to change because humans don't change as much as we like to think we do. To help trade gold, it is worth setting up, commodities and a risk on, risk off profile in your ActivTrades platform, whether it be ActivTrader, MT5, MT4, etc. Always helps to understand gold in the risk of the context of the risk environment. Are we risk on or are we risk off? If you can establish that, well, then you can trade that risk environment using gold. And why would you want to use gold? That because it's volatile enough to have some movement, it's liquid, and is relatively cheap. And what I mean by that is it's cheap in terms of the cost of business, in terms of the spread, is relatively cheap. It's always important to understand the relationship between gold and the dollar, and also other correlations between oil, Swiss franc, and Aussie dollar. When trading gold, we prefer to trade in the direction of the prevailing risk sentiment. Then you can use price action as your trigger, regardless of whether we're trading swings or intraday. And we can have a little look at that on live markets. So here we go. V says, I didn't know that gold had correlations. Is there a gold equivalent of a Forex factory or commodities equivalent of Forex factory? Not really, V. Not really. What you will see is that there are one or two specific gold websites, but what you will generally find is if you just look at the main economic calendar, and then that will give you an indication of when major news is occurring, and that major news will have an impact on the overall risk sentiment. So last week, we had the non-farm payrolls on Friday, and that shifted markets about. This week, we will have FOMC meeting minutes on Wednesday night. We'll have US CPI on Thursday. Both of those will have an impact on the overall risk sentiment, the overall bigger picture, and that in itself can, you can identify looking at gold and other risk on, risk off instruments, and then from that build your own trading plan. So I hope that helps you there, Vic. Good question. Thank you very much. Okay, so before we switch across to the charts, just a reminder that Monday Market Matters is here every Monday, 2:00 London time. And what we want to cover next week is, should we trade pullbacks or should we trade breakouts? So lots of traders will trade both. Lots of traders will focus on one or t'other, which is the one that we should do. So next week's education element, I'll look at pullbacks and I'll look at breakouts, and I hope you'll join us for that. 14th of October, 2:00 London time. Either register on the website or use the QR code there to take you all towards the registration page. And as always, all of our videos now from the ActivTrades and Money Market Matters webinars, they're also uploaded onto the ActivTrades YouTube channel. So be sure to find that out. Be sure to subscribe, and you'll be reminded when the recordings of these sessions, when they're uploaded, because I appreciate some people, it helps them to be able to watch the recordings a few times just to help them truly understand the concepts discussed. And as always, if you've got any questions or comments, and invariably what we're looking at, well then you by all means you can get in touch with your account representative, or you can email englishdesk@activetrades.com if you've got questions or comments. Maybe you've got feedback. Maybe there is topics you'd like to see me cover in future sessions. By all means, do that, okay? And that can actually help us, and we'll take that on board. So if you'll bear with us for a moment, what we'll do is we'll switch across to the charts, have a little look at the RORO profile, and also have a look at how the American markets are setting up for the start of the week. So just bear with us a moment, and we'll switch across. Okay, so I'm hoping that you can see the charts. I'm hoping that you can still hear my voice. I'll just make sure we've got the latest of the sort of charts here. Just make sure dated nice and clearly we can work on. So just a moment, we'll just find these so many fabulous instruments to be able to trade and access. Let's just so here we go. Excellent. Okay, so what I have here is I have a row profile here, right? So just you can see it here, I sort of saved it as, and just what we've got here is I've got this is dollar index, gold, oil, Bitcoin here, dollar yen, dollar Swiss franc, Aussie yen, and also the VIX. So there's lots going on there that can actually help us in terms of understanding the overall risk profile. But just to begin with, okay, just to keep it simple, we can just look at gold and oil, and just bear with me. Let's clear this up and so make it a little bit easier for people to identify and read the market. Let's just create a bit more here. Bang. Okay, so here we go. What I've been kind of interested for is that if I just look at this on the bigger picture to begin with, what I've had here is, despite the fantastic run of gold overall, for about the last week or two, we've actually had gold dropping down. Whereas at the same time, for the last week or two, we've had oil rallying. Now, remember what I was saying there, okay, about the reflection in terms of risk on and risk off. So, see, Abdul has asked if I can be kind enough to explain that again. That's no problem at all. Okay, so think of this row as almost like the sort of overlying concept, the overlying big picture understanding of markets. There's lots of different ways to analyze markets, but if you're in a position to understand whether the market is in a risk on environment or in a risk off, that is a great starting point for new traders to use in terms of understanding that bigger picture. When markets are risk on, okay, they're risk on because people are positive, okay? People are positive about the state of the global economy. And so traders and investors will be searching for a higher rate of return because they believe that, markets are likely to rise. So with that in mind, when risk on, you will see things like oil will rise because people expect there to be greater demand for oil if the global economy is growing. We will also see beta risk on currencies like Aussie, Kiwi, and sterling. They will tend to rise as well. We will see gold will drop. We will see safe haven currencies like Swiss franc and Japanese yen drop. That can have that part. So that is when we are risk on. When we're risk off, that means that people are worried about the state of the global economy. They might be concerned about the global economy, and so invariably, what we see order flows going towards instruments that support that. So in that particular case, oil, when we're risk off, oil will drop. Okay, or will drop because people don't believe there'll be excessive demand for oil. We will see those risk on currencies like Aussie, Kiwi, and sterling, they will drop as well. We will see risk off currencies like Swiss franc and Japanese yen rise, and we will also see gold rise. Okay, when people want risk, when people are a little bit fearful, they will run towards those safe haven instruments, and so gold, Swiss, yen, and a few others, okay, are seen as particular safe haven instruments, and that will basically, order flows will flow towards that. So when I look at here on my row profile, kind of a little bit quickly, what we're seeing is dollar has had a little bit of a bounce over the last week. Gold has just, is drifting lower there. Oil has basically been rallying there as well. What we've also seen is kind of dollar Swiss franc. That has rallied. So, that means Swiss franc is kind of weakening. Dollar is strengthening. People will take that on board. Dollar is strengthening here. Okay, that means yen is weakening as well. And let me just bring these up here as well. One second, let me just take this one. And we can also see that Aussie against the yen has rallied as well, especially over the last week or so. So, we have with gold kind of sliding down, okay, oil rallying, Aussie yen rallying, okay, dollars rallying. that's giving us an indication that there is a case of, at the moment, there's a little bit of a risk on mentality. So I'll be looking for to trade in line with that. If I was looking, here as a swing trader starting today, and that's what we're particularly interested in. So having this profile, having this profile can give you an indication of the overall risk environment, because I want to trade in line with the risk environment. I don't have any desire to fight it. Okay, that's not what we're interested in at the moment. And so then, I was looking at, we've had a great uptrend in gold, but we can actually see that for the last week, 7-8 days, we've kind of drifted a little bit. Drifted a little bit lower. And then I might build that into my intraday trading. So, this is the 30-minute chart of gold. So, I'd be interested to see as price rallies to its highs here, we can see here, and then actually I'd be looking to be a shorter on the shorter term. Okay, and in particular, what I'd be interested in is what we have here. There's a pinball there, bearish pinball there, bearish pinball there. Okay, these are kind of indications that I know that the longer term trend, okay, in terms of the swing trend, is down. Intraday wise, I might like to sort of trade in direction with that. Okay, when that happens, that makes me a happier trader when everything particularly lines up. Okay, so hopefully that just gives you a little bit of an idea of the importance of having a row profile, the importance of building that context, the importance of understanding the correlations, and how you can use that to get you an idea of the general lie of the land. And then, as I said, you want to trade in line with the risk environment. Don't fight it. Don't fight it. You actually utilize it. Abdul says, many thanks for the explanation. Is a recording of this available? Yes, Abdul, all of the Money Market Matters webinars are recorded, and you will find that it will go on to the ActivTrades YouTube channel, probably in a day or two's time, once it's just recorded and downloaded. So make sure that you find the ActivTrades YouTube channel, make sure you subscribe to that, and you'll be sent alerts when the recording of this is there and available for you and stuff. So great to hear that it's been of use to you. Okay, so for the last few minutes, why don't we have a little look at the sort of US indices? How are they shaping up? We've basically, the US market's been open for about 23 minutes. Those of you who join us on a regular basis will know that I talk about how I normally suggest that the sort of first 15 minutes of the US Open, I normally give that a bit of a miss myself. I normally find that it's just a little bit too volatile there. I like to, especially on a Monday, I like to let the market do its thing, okay, sort of fill its orders. And then, after the initial frenzy, it starts to look at the direction that it might want to take. And that is when I start to become particularly interested. So just going to have a little look at the Dow here. We can see actually, you can see this was here for Friday. This was, the non-farms payroll, and you can see exactly how volatile it was. Okay, how volatile, the data was. And so today we're going to likely to get a little bit of there's no news coming out, but what we're likely to do is just get a little bit of extended reaction. So we can see in the electronic contract in the early morning European session, we kind of dropped our way down. And as always, I'm just kind of interested, where are the particular levels? Let me just draw this in on the actual chart. First and foremost, that will tend to work better. Gosh, that's already clipping that nicely. And then if we go down to the 15-minute chart, so we can see here that's the first 15-minute candle, and as you can see, there's just real waves there. We've clipped, both kind of fractal levels. Okay, just excuse my drawing. I'm just doing it a little bit quicker than I would normally, but hopefully you get the idea. Okay, what I'm looking for and what I'm trying to just get an idea of. And what we can see is, if I look at that on the 5-minute chart here from where we played it, you can see there's been, there's a lot of volatility there. Market is, not really decided what it wants to do. And as I said, I don't particularly wish to force it. I'm just quite happy to let it do its thing. It's the 1-minute chart. 1-minute chart's looking bullish, but it's not breaking that 15-minute. It's not breaking out of that range here at the moment. I'll just be keeping an eye on that to see how that plays out. Nasdaq, how's Nasdaq been doing? Okay. just as always, just where are the kind of the recent highs and lows, okay, before we opened up, just to get an idea of what we're up against. 15-minute chart. How did the first 15 minutes open? Well, we can see it was. We've had a few moves here. And just gosh, come on, let's just do that in there. So interestingly, if I go to the 5-minute chart from the open there, the open there is a little bit bearish, which is interesting because what we can see is that the Dow has been bullish, the Nasdaq has been bearish there, hasn't it? It's just kind of drifting its way down there, but it's looking like the S&P. What we also have is the VIX has been pushing it higher. Okay, so I would be expecting. Let's have a little look, going a little bit lower. VIX has been pushing a little bit higher. Okay, so I'll be expecting the price to push a little bit lower, but it's interestingly, we can see here. That's interesting. That's the 1-minute chart there. Here we go. Let's have a little look. Fabulous. Here we go. Interesting. What I'm now kind of intrigued as we go into the start of the next hour is that really we had a kind of an ascending triangle there, okay, which we've popped out on. I'm going to see is that will that kind of continue through, whereas actually for Nasdaq we had a descending triangle. It kind of false breakout is reversed, but is it going to could it break out there? Okay, could it get itself up there and go to the high? So they are. In many ways, the Nasdaq and the Dow they are quite inversely correlated there at the moment, right? As I said, this is why kind of the first 15 minutes or so I always just let it do its thing. Okay, I don't try to fight the market. Let the market sort of work itself out, and then we'll look to engage in the next hour as we come. Abdul says, "What's the best time to trade for gold?" That's a good question. The interesting thing about gold is a truly global instrument. Excuse me. It is a truly global instrument. But if you're looking for where the highest volumes are, you're going to see the highest volumes in the London session and also in the New York session. But there is still normally a little bit of enough movement in gold in the Asian session to be able to active that and trade that. But definitely it's it's a global instrument, but London and New York tend to be where the most volume is done for that for gold itself. So good question. I hope that helps. Interesting, as we said, Dow. Okay, it's trying to break out, but it's looking to me like that might have been a false breakout. Okay, that's interesting. And then Nasdaq couldn't sort of break that trend line either. It's getting squeezed there. Okay, I'd be saying it's getting squeezed between the 15-minute low and the price there, so I'm going to be interested to see how that kind of looks to play out for itself. Certainly, that's there's an evening star formation there carrying on. I'm looking to see is that going to carry its way through. Let's just have a little look at is the S&P giving us anything in terms of indications. Just 1 second. Okay, so what we've seen there, even at the S&P, it's just wanted to effectively tap the edges of the liquidity there. Okay, side you can see it's going pretty much sideways, but now it kind of looks like we're drifting down on the on the Nasdaq. Sorry, S&P. My apologies. So I would be looking at this. I'd have a bit of a a bearish slant here for the first hour. Okay, that's what I'd be looking at. That is false breakout. Okay, is that going to be low? I'd be looking at, excuse my drawing, but you get the gist. The trend line there. That's what I'll be watching as we go into this next hour. See if that gives us a suitable opportunity. Okay, there we go, ladies and gentlemen. As I say, time flies when you're having fun, but unfortunately, we've come to the end of our session today. We've covered quite a lot there. I hope that you found that useful. That's given you a bit of insight into how traders, investors look at gold, why it's of interest, why it's relevant, and actually how you can put gold into context when you're looking at it through the prism of risk on, risk off environments, okay, and how you can utilize that both for swing trading and also for intraday trading as well. Thanks very much to all of you for joining us. Great to see so many people in the room. Great to see so many questions on that. As always, I wish you the very best of success in your own trading. I hope you'll join us next week where we'll talk about should you be trading pullbacks or breakouts. And as always, have yourself a fabulous trading week, everybody. And I'll speak to you soon. Many thanks. Take care.